So, I was doing the market commentary, and I kind of decided not to do it. I feel like I'm just kind of repeating myself every week, twice a week, just really focusing on primarily like a small set of price action because I've covered literally everything else. And I was trying to think of something that I could do instead because I just don't want to do a market commentary. But one thing I did want to kind of go over, I think, is just a small, maybe mini lesson, right? The idea of when to expect a pullback, right? So, looking at Euro USD here, right? Let's just look at the 4 hour, right? And just kind of study price, right? As we know from the other market commentaries, we understand that price has been bullish, right? The expectational order flow is for higher prices following this kind of bullish trend, right? So we know this, we're aware of this. As of right now, the expectation is filling out, right? It's playing out the way we expect. We are tapping into some serious supply zones where we should get some pullbacks and opportunities to get into a higher time frame pro trend move, right? It's kind of like the goal of the whole thing, right? Counter trend moves typically suck. They're rangy, they're choppy, they sweep liquidity over and over again, and then eventually drop, and they're not as easy to read as pro trend moves. So with that being said, everything has a catalyst, right? Price pulls back because it taps into various levels of money, essentially, right? So even on this weekly stuff, right? Why did price pull back? It tapped into a weekly. If we look at the 4 hour, right? Every single pullback, if we look at this, why did price pull back? Now, what you need to understand is what is your directional bias, right? So for instance, when we went bearish off the weekly and we started to break structure to the downside, our bias is now bearish, right? We're looking for shorts. And now that we've tapped into that higher time frame demand zone and we're breaking structure to the upside, and our higher time frame expectational order flow is also bullish, we're now pro trend and we're only looking for longs, right? We could look for shorts, obviously, off of some of these supply zones. But what we need to understand is where are the catalysts, right? Price is fractal. So this being a weekly catalyst for a higher time frame pullback, these 4 hour supply zones are going to serve as the same. So if we look at the most recent price action, what we can kind of look at is these 4 hour supply zones at the extremes, right? Price came up, price came down. 4 hour supply zone. Price came up, price came down. 4 hour supply zone, right? Here is a buy before this sell, right? It's more or less a reaction from this demand zone as price shifted up. Price gave this reaction here and then just ultimately failed. So it's a valid supply zone, but it's not a real structure point. So you might not expect a major reaction from it, right? So by studying price and kind of understanding these things, when you're trading into these levels, you can kind of determine if it's worth holding or if it's worth taking profits at, if you're in it, obviously. And then here, of course, again, we have this pivot, right? Price comes up, price comes down. Every time price shifts momentum, there's typically a large injection of capital. That's why we get these reactions. Price hits these levels, we get a pullback. So when we're trading pro trend, higher time frame expectational order flow, our best opportunities come from these levels, right? It requires patience because if you're looking for entries on the lower time frame, 15 minute, 5 minute, 1 minute, 15 second, 2 second, whatever, you need to understand that price has to more or less build more liquidity to continue to the upside. So here we get consolidation and then continuation. Here we get consolidation and a continuation. Here again, we're probably going to see more of a range and then a continuation because again, our expectational order flow is to venture into these higher zones. Now we do have a pretty significant level here, which I'll keep as a daily area because there's a lot of this kind of market imbalance here. And this is a sweep of liquidity, right? The push up, the buy before the sell that broke structure to the downside. That ultimately caused price to tap into the higher time frame demand zones. So when we're looking again for entries, we're going to look at these supply zones, right? Neighboring structure, right? We have this bearish structure to play against, right? All of this here, potentially at some point, some of this as well. A lot of this has been kind of played out by this guy here. So in theory, if we do get to this level, we might get a pullback here and we might get a push up. There may not be too much resistance until we get to the actual apex of price, right? But again, expectational order flow on the higher time frame says that we should break that level. But what should we get? More than likely, we should get some kind of pullback or reaction, right? Just clean that up a little bit, right? So all of these levels are good levels to take profits at. Look for new entries, right? Kind of have the mindset that an expectation for price to give a pullback, but ultimately it should not result in breaks of structure to the downside. Now, of course it could, but that's a little bit more rare in a pro trend move. A counter trend move, you're going to see a lot of this stuff, right? Structure breaks to the downside. This is a failure to break. This fails to break the low as well, but the expectation order flow still is for lower prices. However, we then get what you get typically in a counter trend move, a sweep of liquidity and then the break of structure, right? So if you're looking for this as a break of structure to the upside, and you look for a long from the position out here, you are just going to be unfortunate. You might take a loss here, right? But that's standard because, again, counter trend moves are choppy. Pro trend moves are impulsive. So let's look at this, for example, right? Once price gave us this bearish price action, what levels are we comparing price to, right? Where are we looking for potential reactions? We're going to look at everything in this leg, right? We're going to look for equal highs and equal lows. We're going to look for demand zones that may cause reactions, right? So let's map them out. We have a demand zone right here, right? This is where price came up, pivoted, went back up, failed to break this high, that's right, but it eventually fulfilled that expectational order flow for higher prices, right? So this is a perfect demand zone. What do we get? A catalyst for a pullback. Go figure, right? Then what do we get? This is pretty much one swing leg here. Some wicks in this area, but this is technically a demand zone, right? What happens? Price comes into the level, and it gives us a pullback, right? Oops. And again, where's the next area? This here, we'll just take the swing low, the extreme. The extremes are always the best in my opinion. And again, same thing, right? Catalyst for the pullback, for the continuation short. So all these areas, when you get these pullbacks, you can look for entries, right? Price pulls back, you look for entries. Price pulls back, you look for entries, right? So you can use these areas as these catalysts for pullbacks to catch continuation trades, right? If you're aware of them ahead of time, you can understand that price is more likely going to give a reaction at these levels, and you can use that to your advantage and trade from. So understanding where price is going to pull back, give a correction, potentially range ahead of time will help you with your mindset, right? Now, it applies on all time frames, right? I just prefer to trade from the 4 hour because it just yields more results, better results. That's, you know, something about structure on the 4 hour speaks to me, and that's just what I prefer. And even here, right, we have another last sell before the buy, and right, pullback, a very deep pullback, mind you, but a pullback nonetheless. Because why? It results in the continuation short, right? So the one thing to note as well is that when price pulls back and it comes back to these levels, it just melts through it, right? Price comes up, comes back to that level, and it just melts through it. Why? Because these levels of supply and demand are more or less dried up, right? This initial tap that gave the pullback, dried up. This initial tap that gave the pullback, dried up. Here, it's dried up, right? We might get some like small intraday plays, but ultimately this level doesn't really hold. So when price finally hits this level here, this demand zone, price comes back up, what happens? Price just rips right through it, right? Again, here's another demand zone, catalyst for a pullback, right? Your price comes up, rips up through, and then what? When it comes back into this level, what happens? It doesn't hold, it fails, right? So understanding ahead of time that the demand zone has already been tapped into and more or less used up or dried up or however you want to kind of say it, you got to understand that these levels become weak, right? They've been used up. So when price comes back into them, you can expect price to continue lower, which is why trading from these pullbacks is such a great opportunity to get in, right? Because you might initially take this trade, but you need to understand that when you come into these proper demand zones, you'll get a reaction. In theory, when you're talking about expectational order flow, right, this high, right, we've broken the structure here, so this is the high, this is the low. Price should, in theory, fail to break this high, but in fact, break the low, right? So now we have this high, this low. Price should, in theory, fail to break the high, and then come to the low. Now here, it fails to do that. Why? Because it built liquidity, and it needed more liquidities to sustain a longer term trend to the downside. So again, counter trend trading can be pretty difficult. We have an expectational order flow failure here. However, that being said, once price tapped into this unmitigated level of supply, right, liquidity, supply zone, taps right into it. If you could catch continuation shorts, I would highly recommend you do so, right? So when we're looking at structure in general, this is what I mean by study price. Like, just go into the chart, just look at price just as I am now, and just try to get an understanding of what it's doing and why. So that way when we get to current price action and we're seeing similar things just on the opposite side of the spectrum, right? Here obviously we're coming bearish into various demand zones. You notice that price isn't completely reversing or continuing along from these levels, right? They're just catalysts for pullbacks. They leave supply zones for potential entries along the way, right? So when you're trading, you know, keep this kind of structure in mind. You know, just look at the charts the way I'm doing it now, just on the 4 hour, whatever your kind of preferred analysis time frame is. For me, it happens to be the 4 hour. I always keep an eye on the daily, always keep an eye on the weekly, but the 4 hour is kind of my jam. So I stick to that. I look for entries on lower time frame. I try to understand if a demand zone or supply zone for that matter has already been tapped into. So that way when price does come into it, I'm not going to sit here and try to look for entries, because I know that this is the actual catalyst that causes pullback. So when price comes back into it, it should in theory fail, right? Not all the time. I mean, obviously here we do get a nice wick and reaction, but it's pretty short-lived, right? So if you want to trade with that in mind and hit something quick and hard and then just get out, right? Obviously do it. But if you're a little bit more conservative, you might need to use caution with that approach. So, you know, with that being said, this is it, right? Expectational order flow, breaking structure to the upside. We got a swing high or swing low, swing high. Even though price comes down and then fails to break this high, it doesn't mean that it's going to drop short, right? Why? Because it takes a lot of money to break supply and demand zones. So if it's building money and injecting money into the market to push the market higher, it's not going to want to break this demand zone, right? So using expectational order flow, even if it ranges, right, within this complex pullback, we can use every single opportunity within this level to get long, right? And in this case, if you like supply demand, or excuse me, if you like trading premium discount, there's a lot of opportunity to get in, right? You have this demand zone here, you could have got in here. You have another demand zone sort of here, you could have got in here. You got another demand zone here, you could have got in here, right? A lot of opportunity to get into this trade. Even if you took one, you would be doing very well. Again, this is why I like the higher time frame stuff, right? You get into a trade like this here and you're gone, right? hit the next demand zone, or a supply zone in this case, understand that you should get more or less unfavorable price action, but also understand that expectational order flow should hold, right? But again, you need to have liquidity in the market to continue higher. The only way you're going to get liquidity is by hitting these supply zones, giving a pullback, getting people to run short, building these consolidation levels here, building more of your your large orders from institutional orders. If JP Morgan wants to buy a million standard lot buy order, they need a million standard lot sell order. The only way they're going to do that is to get people to place buy stop losses on buy orders, which are technically sell orders, or entice sellers into the market by driving price short off these levels, right? All these bearish candles. Yeah, I feel like I'm beating this point with a stick right now, but I think you get the point, right? Use these supply zones in your neighboring structure for pullbacks to catch continuations into your directional bias, right? So here we're in this last supply zone, we're getting a pullback, we're probably going to run here. There's a very good chance that we may range for a little bit, right? Complex pullback within the swing high, swing low. It could come back into this level, not really sure, but for me, this one here is a full bullish leg, this whole thing. So we could play within this range and then eventually go. But again, expectational order flow should say that we should continue higher. So I will continue to look for longs from this level here, and see what we get. But I hope you guys aren't too disappointed that I didn't do a market commentary. I just really don't really see it too necessary right now, because again, I think last time we spoke, price basically tapped into this 4-hour supply. The only update is we got a pullback. We're still expecting price to go long, and it's pretty much the same thing with GU. Price has basically tapped into this more or less 1-hour supply zone. Supply, right. It's given a pullback. It's basically tapped into this guy here. There's a 4-hour supply. Well, I guess it now technically is maybe a demand zone, but price is coming into this level. Expectational order flow, we've broken structure to the upside. We are approaching this. We built more liquidity to the upside. Price should continue higher either from here, potentially after ranging for a little bit, might come into this level, drop, come back here, and then go. So we'll keep an eye on it. But outside of that, I hope everybody is having a good trading week. Everything that I've seen on Instagram today has been absolutely outrageous. I don't even know how much the community has made today. It kind of blows my mind, to be honest. But keep it up, guys. You guys are absolutely crushing it. All right, have a good day.